This is about the bull case actually coming to fruition. You know, historically, the case had always been that they would reach some point of leverage in terms of the operating model, and they've held operating spending in check. It actually came down a little bit this quarter, and they're showing the profitability of the manufacturing base. And I think folks really underestimated the power of that model. We actually got more bullish in August on the potential for the gross margins on Model 3 to beat, and we're seeing that come through in spades here.
So mission accomplished?
No, not at all. This is just the start, right? I mean, they have a lot of work to do, and the competition is coming, but it's coming slower than we expected, and that's, I think, the big story for us here is that there are a couple models out. They're not great, and they're really not competing in the $50,000 to $70,000 market, and that's really where Model 3 can, I think, run the table for a couple of years here, and that will actually support the stock for a couple of years.
And for Tesla to really be a success, it's going to have to make that cheaper version and bring in the masses. And I just wonder, Elon Musk has been pretty outspoken on his Twitter account and in other places about making sure that people get out there and buy their vehicles this year while they can still get some of the federal deductions that go away after this year. How big of a problem is that? Are they pulling forward sales,
we're not real concerned about that. I mean, the cost reduction in the industry is pretty robust, you know, and Tesla is getting better at making cars. They're actually quite inefficient at that at this point, and so as they walk down that cost curve, you know, getting to a $35,000 car that they can make money on is going to be a challenge. Nobody's confused about that, and they have a lot of work to do. But I don't think they need to do that for at least a couple of years. They're going to keep ASPs. We think they were north of 60 here on the Model 3 in the third quarter. They're going to stay above $45,000, $50,000 for at least 2 years, if not longer.
You mentioned the bull case coming to fruition. The bear case most likely isn't going to go away. Maybe it's going to change, and I wonder what's being thrown at you. For one thing, people talking about how this particular quarter was inflated on the earnings line by reductions in R&D spending or SG&A spending, things like. In other words, did they pull any levers to make a big number this quarter?
Yeah, I mean, to quote one of my clients, you know, they shot off all the cannons this quarter.
Yeah.
And that's really pretty clear. And the question is, are they spending enough? We think they're spending a reasonable amount. They're going to have to start creeping spending up as they go forward. But as manufacturing and volumes increase, then we do think they have more cash to work with. And so the big question, in our view, is, one, how do they deal with the balance sheet? They've got this $360 strike price convert that comes due in March. And so whether the stock goes high enough that they can just convert that is
maybe why they shot off all the cannons.
Well, yeah, of course that's why they shot off all the cannons, right? And then the next thing is, what's the real depth of demand for the Model 3? And so if you look at the bear case, it's been 250,000 cars a year. The bull case is more like 500,000. We think they can make about 350,000 next year. And if they're able to do that, there's enough leverage in the model to kind of support it. But then they have to get to that $500,000 or 500,000 vehicle number. And so they're going to need to increase manufacturing capacity, and they're going to have to start advertising a little bit more actively. And that's the real crux of this, in our view.
Colin, Elon had his mid-quarter meltdown, and I was an outspoken critic because I thought it was unfair to investors. But oddly, I almost think it was a good thing for the company because the settlement will take away his Twitter account to some extent, or at least pass it through a filter. It'll bring some additional governance to the company, and it'll let him focus on being a genius. How are investors viewing the SEC settlement?
You know, I'm going to disagree with you a little bit. They needed increased corporate governance. I don't think there's any question around that. But I do think that they've tried the patience of a lot of very talented senior managers, and we've seen some leakage on that front, which is a concern for us. I do agree that, you know, the structure that they may get out of this could be helpful. I'll agree with you on that. But how they implement that is a real concern for us. You know, there's still a question about who the chairman ends up being and what the structures will be. I'm not going to speculate on that because I really have no idea.
Does it matter if it's somebody who's already on the board or if it's an outsider with either auto or
I think it does. I mean, I think it would be good for an outsider to come in. I think that would help everybody, and especially someone with a strong will. Whether somebody wants that job or not is a real question, because it doesn't sound like a great job, to be honest.